Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the DowJones30 futures chart. The Dow has continued to plunge over the past couple of trading sessions, and this is largely due to its large exposure to financial stocks such as banks. We have seen many of the regional banks in the US pull back significantly, more than 50-60%. For some of them, and of course this has had it's basically weighed on the larger banks which trade within this indices. So we've seen the likes of JP Morgan and Goldman Sachs all fall roughly 5 to 10% in the past couple of trading sessions. And as a result of this, we've seen the Dow break below the 0.5 fib area, and we're now testing the 0.382 fib area. And we're also back testing this downtrend that we were trading in for most of the year of 2022 until we broke out at the very end of last year. So this is a typical technical movement, but does occur. But of course, this is on a larger time scale, where you basically break above the previous roof of the market. You go to the next target, where you could argue was the 0.786 fib area, or even the August highs here, and then you go and back test the previous roof as the new floor. So we would need this area to find support here and for us to bounce here, then that would then recognize that we have officially broken out of this downtrend, and then that would probably send us back up towards 34,000. With that being the case, I still believe it's too early to own the Dow Jones 30 here, even though from a technical perspective this does offer a very attractive risk reward ratio. You could enter a very low risk buy position where you put a stop loss just below yesterday's swing low, and you could put your take profit all the way back up at the 0.61 fib area, and that offers you a fantastic 4, maybe even 5 to 1 risk reward ratio. But I still believe it's too early, and I do not want to participate in this market. So with that being the case, I'm going to continue to sit on the sidelines here. Of course, there's lots of volatility happening on a daily basis. We saw the 2-year absolutely free fall yesterday, its fastest drop in over 35 years. We've also seen this occur, which is very interesting. We've seen a break of the downtrend in the 2 to 10 year spread. And, if we can trade back up towards zero, that then would confirm a uninversion in the yield curve. And history would tell you that a recession typically does occur 3 to 6 months after this occurring. So very mixed signals as always in the stock market. But when I do decide to enter a position, I will of course let my signal team know straight away. So if you would like to join my signal team and participate in any future signals, I also have a trade open in the S&P 500 and the Nasdaq 100. And you can still get involved in those two trades. But if you would like to join my signal team and receive my daily research, then please do not hesitate to scan this QR code on your screen. I charge a very small joining fee of $29.